Welcome back. It's time now to take a look at the top business stories. UAE draws a map to lure foreign investments. Dubai duty-free sales jump on strong gold appetite. And S&P warning adds default threat to Greece. Let's first look at the UAE stock markets. The DFM was up slightly by 0.2% after rallying already 2.4% yesterday. The index closed at 1,555 points. Dubai Islamic Insurance was up 4.6% today, while Islamic Arab Insurance rallied 4.9%, and Dubai Islamic Bank was up 0.5%. Stocks to lose included DIA Development, which fell 1.7%, and Arab Tech Holding, which dropped 0.8%. 107 million shares were traded, valued at 129 million dirhams. And over in the capital, the ADX gained 0.3% to close at 2,715 points, with the industrial sector adding the most. Arkan Building Materials Company, for instance, surged 7.6%, or Gulf Cement Company, which was up 4.7%. Both Alder Properties and Through Real Estate were up 2.3% and 2.4% respectively. And Etisalat was up 0.5%. One of the few shares to lose was Sharjah Islamic Bank. Its shares dropped 1.1% today. 82 million shares were traded, valued at 109 million dirhams. And let's now look at the GCC equity markets. The country's main benchmarks ended mainly higher today. A combination of improved US data and Greece-approved debt plans saw risk sentiment pick up last week. The US equity markets, for instance, posted their highest weekly gain in 2 years. To talk us through the moves, we're now joined by Gaurav Kashyap, head of DGCX Trading at Alpari Middle East DMCC. Welcome, Gaurav.
Thanks, Linda.
Now that the whole Greek issue has calmed down, what are you looking at this week?
Well, Linda, you're absolutely right. We saw some kind of conclusion to, actually some kind of closure to the whole Greece issue, barring S&P's surprise announcement that, France's new proposal could be seen as a default. But I think putting that on the back burner for the time being, I think we're going to be focusing more on the U.S. economic recovery this week. We have a bunch of data coming out from the U.S. headlined by the non-farm payroll number on Friday, which will really term and put the U.S. recovery back into perspective. We have just come out of a very soft patch of data in Q1 and Q2, which showed that the numbers are not adding up to what the recovery should, in fact, be. And I think Friday's non-farm payroll number will be a big draw on that sentiment. We also see on Tuesday's factory orders from the U.S. also to be a very important influence on equity prices for this week, as well as ISM non-manufacturing data on Wednesday. But as I said, it's all going to come down to the non-farm payroll number on Friday. We need to see some jobs added in the region of 90 to 110,000 to say that the economic recovery is really on track. And of course, along with this, we also have the ECB's rate decision on Thursday.
Now, crude oil was up 4.6% last week. However, not so good in June. It fell 8%, the price of West Texas Intermediate. What are you looking at concerning the oil market this week?
It's been quite a month for the crude contracts. We saw the West Texas crude contract tumbling from about 103 levels all the way down to make a low about 90 levels. Now, I think obviously with the surge in risk sentiment, with higher equity prices, we're seeing the crude contract close June on a very positive note, up around 95 levels where we are right now. Now, technically, we're finding very good support coming in crude between 90.50 and 91 levels, which represents the 55-week moving average. I'd be very surprised if we see a break of this level. We should probably see one more bull rally in the commodity markets, which would mean probably a test of about 100 levels in this week and the next week. Watch for equity markets if you're trading crude, and of course, watch for the non-farm payroll number. Any type of improved number, we'll see risk sentiment improved. We'll see upsides in equities and upsides in commodities.
Thanks for your insights. See you next week. And now to our top stories. The UAE investment map will, in the next few years, set the strategic direction of foreign investments into the UAE, Sultan bin Zayed Al Mansouri, UAE's Minister of Economy, said on Sunday. The investment map is a project aimed at diversifying the UAE economy away from oil by luring foreign investors into the country. It will officially be launched in November, the minister said, and is in line with the ministry's commitment to boost the country's competitiveness. He added that the key objective of the investment map is to promote FDIs in the UAE and add to the UAE's economic growth in the years to come. According to press reports, the UAE investment map is set to open 4 offices in Britain, Italy, Spain and South Korea. Sales at Dubai duty-free jumped nearly 17% to 2.5 billion dirhams in the first half this year, as consumers cannot get enough of gold. Gold sales jumped 24% in the period, and by that the metal was among the company's 3 best-selling products, Colm McLaughlin, Dubai Duty-Free's managing director, told a local paper. Consumer spending has increased across most categories, he said. However, there were significant spikes in luxury sector products. The gold price since the beginning of the year is up 6.5%, however, fell below the $1,500 per ounce threshold after Greece agreed on further austerity measures at the end of last week. And in our fast financial news, bank deposits in the UAE in May fell 0.4% month on month, reaching 1.1 trillion dirhams. That's according to the Emirates Central Bank. Also, total bank loans and advances fell in May by 0.5%, reaching 1.05 trillion dirhams. However, total bank assets rose 0.5%, reaching 1.7 trillion dirhams at the end of May. Saudi Arabia, together with the UAE, in May provided 59% of Japan's oil supplies. That's according to a report issued by the Agency for Natural Resources and Energy, which is connected to the Japanese Ministry of Economy. Saudi Arabia maintained its position as Japan's biggest supplier with nearly 32 million barrels exported in May. The UAE followed as number 2 with 25 million barrels of oil. And after the break, we'll run you through what's making the headlines in international business today.